Hey everyone, in this video we're going to be talking about stocks that I am buying. I have been going on a little bit of a buying spree in the past 24 hours. Most of these stocks are sitting at their 52-week lows, if not at them, very close to them. Now, for those unfamiliar with what a wash sale loss is, it's important to note that when a stock is down, if you sell it and you want to take that loss to basically go against profits you have, you can't rebuy that stock within 30 days from buying or selling it. So you have to basically wait 30 days after you sell it to rebuy it. So if anyone has a stock that is basically down and they want to sell it to take the loss this year, they're going to sell that stock, and they're going to sell it more around this time of the year if they want to rebuy it in the beginning of January, because they need to sell it at least 30 days before January 1st if they wanted to buy it back on January 1st, for example. Now, to be clear, if you bought it back within those 30 days, you can still obviously buy the stock, no one's stopping you, but you just can't take the loss. It's a little complicated, but that's for a different video. Now, the good thing, and the reason I even bring that up, is because when a stock has been going down all year, a lot of investors have losses in that stock. And what are they going to do? They're going to want to take those losses. So they're selling those stocks. So the stocks that have went down all year are now going down even further. And this creates opportunity for long-term investors like myself, because when the stock is down and you've already done the research and you believe in the long-term thesis and nothing has changed with your long-term thesis, and you get to buy it at a 52-week low and it continues to drop, it is a great buying opportunity for long-term investors like myself. So that is what I am doing, and that's what we're going to talk about in this video. Now, to be clear, buying at a 52-week low on its own is not enough. Now, I have decided to take positions and add to positions in the following companies based on many factors outside of the stock price, but we're only going to be discussing the share price compared to where it was and the fact that I bought it in this video, because we're going to be talking about a lot of companies and it would be too long of a video if we were going to go into the research and the reasons of why I like each one of these companies. But the good thing is many of these companies, I do have individual stock videos and stock analysis to go deep dives into them on my channel. So definitely look for that. If I don't have it on one of these companies, just write in the comments you want to see a deep dive and I'm happy to do it. Now, the first stock we're going to be discussing is PENN National. I believe it is time to buy PENN, time to add to PENN. This stock has got beaten down since the last earnings report. Now, we're not going to do that deep dive like I said in this video, but just to get an idea, if you look at this stock, we're talking 35.2% down year to date, and that is from like the $80 level. If you look at their 52-week high at $142, we are almost 1/3 of that price now at $52.42 closing price today. So, I mean, this stock has taken a beating. If it just went back to its all-time high, that's a 3x from here. Obviously, don't just go off of all-time highs and whatnot. You have to do your own research, find out what you think is a fair price. I do have PENN videos uploaded, so definitely check those out if you're more interested in that stock. But yes, I'm buying PENN. Now, the next stock we're going to be talking about is BurgerFi International. This is now trading at $7.50. This is the 52-week low for this stock. Its 52-week high was $17.70, so it has basically cut down more than 50% in the past year. Now, this stock, also, the company has bought Anthony's Coal-Fired Pizza, so it is not just a burger brand, it is also a pizza brand. They have multiple basically assets now under that umbrella, and the entire market cap, we're talking tiny market cap, $159 million. Just, put that in perspective to Shake Shack and McDonald's and other places, we're talking peanuts. So wouldn't take much to get that stock much higher than where it is. Check out my BurgerFi video for more details, but yes, we're buying some BurgerFi at these levels. Next is Beyond Meat. Beyond Meat is one of those stocks that it could go either way down the road, what ends up happening with it. But Ethan Brown has proven to be a visionary CEO, and he clearly has a vision where Beyond Meat is, to say a multiple of itself would be an understatement. He believes they will be worth more than $50 billion. The stock is $4.9 billion market cap today. We're down 43% in the past year with this stock. It has just not been able to basically get the traction and deliver on the earnings. Now, Beyond has amazing partnerships with McDonald's, has a partnership with Pepsi for snacks coming out soon, and this stock is down 43% in the past year. This stock is at $77.53, sitting at its 52-week low, basically, and its 52-week high was $221. We are talking about basically one-third the stock price. Just to get back to its 52-week high, it would have to 3x from here. So yes, at a under $5 billion market cap, I am currently adding to this position. The next stock to talk about is AT&T. Now, AT&T is not a stock that I personally have great opinions about when you're looking at their balance sheet, for example, a ton of debt. But I do believe if you're buying it today at $24.13, which is down to basically not just a 52-week low, this is basically the low of like its lifetime almost. I'm looking at a 5-year chart. I don't think it's ever been this low in 5 years. Now, keep in mind, they've been paying an insanely high dividend, which is obviously going to come down a lot. But that said, they have also been doing things like merging off Warner Brothers with Discovery, which is, I think, going to pay very well off for shareholders of that new entity. Warner Media Discovery, I believe it's being called. And then also AT&T is getting back to the basics. They are not going to try to be this like conglomerate they were trying to be. They made horrible acquisitions in the past with DirecTV, etc. And I do think as that now has unfolded and everyone who's in it just for basically the dividend, there are no investors who are looking really, I think, at the upside to come as they get back to the basics, focus on the core of AT&T's business, and spin off the things that don't belong in that core. So I am taking a position here at this low, and I'm also doing it with Discovery. Now, personally, streaming is a big business and a business that I think is going to provide massive, massive returns in the long run, especially for Disney and Netflix. But I do think that this Discovery Warner Media merger could be something extremely profitable for investors who sit through it. And and I do believe that Warner Media really has the goods to deliver on this vision. So, and I think the CEO of Discovery might be the right guy to really run this and execute properly in a way AT&T's management has not been able to. So, because of that, I'm not only trying to get the shares through AT&T, I'm also planning to get shares just straight through Discovery. To be honest, I am still doing a little bit of the research behind both of them and which position would be better to hold to get the best deal. My guess is it's probably about the same, but obviously there are sometimes little differences here and there because the deal might not go through. And if the deal doesn't go through, which company do you want to stick with? So that's something to keep in mind. That said, I do like both companies at these levels, and that is why I added to them today. Next up is Peloton. Peloton is a company that I think could have a very bright future, but obviously has had some bumps on the road. Now, I have not been a big, advocate of owning Peloton stock by any means. I was not a fan of it that much above the $100 level, and I've watched it come down, and I've been thinking about it for a while and thinking, as a long-term investment, do I want to buy this stock? And when you look at the year to date, we're talking down 67.7%. When you're looking at their 52-week high, we're talking $171 a share, and today it's sitting at a 52-week low, basically $47 a share. 52-week low was $45.90. It's basically at the bottom. We're talking about more than a 3x to get to that 52-week high, similar to some of these other companies we've been talking about. So huge gains ahead if it ever does get back to those levels. But obviously, I don't believe those levels were fair price for it at the time, and that's why I didn't own the stock at those levels. But at today's price, I'm willing to take the gamble, and I'm adding. Next up, we have Canopy Growth Corp, CGC. This stock is down, it's down 77% from its high, basically. This stock is trading basically at a 52-week low as well. It's trading for $12.18. 52-week low was $11.31. Its 52-week high was $56. It is basically 5 times lower than where it was at its high. So like all the other stocks, I've done my research. I do like this company for the long run. I didn't like it when it was trading that high. I've been thinking about it. I have done videos saying, I'm thinking about buying this one or a different one in that industry, the MJ industry. But I did decide today to buy the stock. So I did add CGC today at a close to 52-week low. Next up is ticker NVTA. This is a genomics and health play. This is one of the stocks that I believe Cathie Wood really liked for a while. I believed it was in her ARKG ETF or genomics ETF. This stock is trading for a 52-week low of $18.89 right now, and its 52-week high was $61. This has fallen more than a third of its value, another 3x back to its 52-week high if it was to get there. Now, this stock, I had earnings actually not too long ago, like many of these companies we're talking about, and I thought their earnings were pretty good, actually. Now, I did decide to take a position in it. I don't know how much ARKG used to own in it. I did look into to see, does she still own it? She does still own it. I believe it's like 1 or 2% of the ARKG portfolio. But that said, I was very happy with what I read into them, and I might be doing a video on them soon. But I did begin a position at this 52-week low for this company. Next is a name many of you probably have heard, WeWork. I did decide to buy into WeWork. Very familiar with the company. Have a lot of friends who have leased in WeWork offices, and WeWork has been a mess, to say the least, since they decided they were thinking about IPOing very long ago, with the founder who's no longer with the company. But that said, I do believe the opportunity ahead for this company could be tremendous, and I decided to take a position with the stock being so cheap, I believe, at this point in time, relative to where it could be if things do go the way the company plans, and if they really execute extremely well, and assuming the world goes back to normal. Now, this stock is also at a 52-week low, basically. It's at $8.71 a share. Its 52-week high is about $15, so we're looking about 50% beneath the 52-week high. That said, this stock SPAC'd not too long ago at $10. So to get an idea, you're getting it basically for 20% off of the original fared SPAC price that they believed was a fair price. And I did think that $10 price was actually fair when I was looking into it. I didn't invest in the SPAC at the time. I bought it a little after, and I sold it a couple days later for a nice little profit. And I just watched it and decided today I'm going to add it at this, now that it's in the $8 range. Next up is Squarespace. I think this is a great company with massive potential ahead. I think they are an acquisition target as well. I've done a video on Squarespace before. I think Square should buy them personally. But that said, this stock is down 21% in the last 5 days. From its 52-week high, the stock was a $64.71 share at the 52-week high. It is now down to $36.85, not its 52-week low, but not far from it. It is lower than its IPO price. It did IPO not too long ago, and you are getting it for a cheaper price than the IPO, but you are not getting it at the exact bottom, but very close to the bottom. So yes, I am adding to my Squarespace position at these levels. Next up is Zillow Group. Zillow Group has gotten a huge beating since it decided to get out of the iBuying business. It was a horrible fail on that company's execution on that. But that said, this is still the premier company that everyone goes to when they're looking to purchase a house. From my experience, I'm on that website all the time. This stock is down from its 52-week high. It is $55.87 a share at the 52-week low, currently trading very close to that, $56.39. The 52-week high over $200, $212 and change. This stock is basically trading for almost a fourth of its 52-week high price. Now that said, like almost every stock we've talked about, their 52-week high prices, I believe, are all tremendously too high and not the true fair price. At least not now. Could they be the fair price in the future as these companies grow and expand? Of course, they could go to those prices or beyond. But that said, now that they're trading at a very reasonable price, $56.39 for Zillow Group Class A shares, ticker ZG, I think this is extremely cheap if you have a long enough time horizon. If you are going to wait this out for 5-10 years, the profits of their business outside of iBuying are going to reward you, in my opinion. Obviously, this is not financial advice, but I do like buying it at these prices. But it is going to be choppy. It is definitely going to be a choppy ride along the way. Now, Activision Blizzard, this is a stock going through some serious accusations, some serious problems among company culture and things going on in the workplace that should not be going on. So this stock has taken a serious beating. They are calling for the CEO to resign. And they want the board to be changed. There is a lot of things that could be happening, but I'm just going to give you the basics that this stock is trading at a 52-week low, $62.38. 52-week low was $60.90. This is trading much lower than its 52-week high, which was $104.53. Now, there are other things like game delays, etc., that have pushed this stock down. But that said, I think this is one of the best companies with game franchises out there. Call of Duty, World of Warcraft, King, Blizzard, Activision. I mean, this company has some amazing content, and content rules over everything in today's world. So that said, I am adding at these 52-week lows for the long-term vision, the long-term horizon, and I hope the management does get replaced. I think a new management, some new blood in there could really do good for the company, do good for the stock long-term, so I'm adding at these levels. The next stock to talk about is Robinhood. This company has the potential to be a $100+ billion company down the road, a huge fintech company because it has the users, it has the brand, and I believe that it also has the correct product, and I think that that product is going to continue to evolve and get better. Now, I'm not going to sell you on Robinhood. I'm just going to go over, like everything else, the stock. This stock is down over 30% in the past month. If we're looking at its 52-week low, that's where it's basically sitting. It is cheaper than its IPO price by a lot. It is $28.99 right now, the closing price of today, and this stock, compared to its 52-week high, is trading at about a third. It would have to almost 3x to get back to its 52-week high. Now, obviously, like all of them, not saying the 52-week high is the fair price, but that is how much it has dropped from that point. I am adding to Robinhood here, and I think this is an amazing opportunity for something that could take a while to get there because, their last earnings were rough. But in the long term, if you have a 5-10 year time horizon, Robinhood could be a huge winner, I think. So I am adding. Now, anyone who follows my channel knows that I bought Baidu, knows that I bought Alibaba, and knows that I sold Baidu and that I sold Alibaba. But now I am buying Alibaba again. I'm not buying a lot of it. I still believe in all the worries that I believed in before. If you look at my videos on Alibaba and Baidu and the Chinese government, I basically think it's just not worth being in the Chinese government stocks. Anything that has to do with China in a big way, I don't think it's worth the risk. That said, it is significantly cheaper than when I sold it, and I decided I'm going to take a small purchase, nowhere near what I was owning or what I was willing to buy back then, because the risks remain the same. And I don't even think, that I can feel good recommending anyone to buy Alibaba, to be honest. But, I'm not going to lie to you. I did buy it, so it's in the list. Next, let's move on to ARKG. I decided to buy some ARKG when I looked into it. I've had this ETF before. I think genomics is going to be a huge, huge industry going forward. And the truth is, I'm not, smart enough to know the science behind all these genomic companies. It's not my field. And I rather trust someone like Kathy Wood and her team, and I'm sure she has some great genomics experts on that team to pick out the genomic companies of the future. Now, although I did pick one genomic company earlier that we spoke about, I do want to just have exposure to that industry, so I bought a little bit of ARKG. Next up, one of my largest stock holdings that I have, Disney. The Walt Disney Company has taken a beating since the last earnings report. This is not at the 52-week low yet, but it is very close to the 52-week low, especially as time passes, because that 52-week low happened a year ago in November of 2020. So as a little time passes, this is going to become the 52-week low that we're sitting at, the $154 price point. So it is sitting at a year-to-date low, and I believe it can get a little lower, but long-term, I'm a massive bull in the Walt Disney Company. I think that profits are going to be better than they've ever been if we're looking a year or 2 years out. as parks are back to normal, as the new CEO, Chapek, has basically dialed in to make as much profits as possible from these parks, cruises, everything that Disney does, and as streaming continues to grow their ARPU and their size subscriber-wise. So that said, I am a huge fan of Disney, and instead of buying Disney stock, though, I did buy some options, which we'll get into now. Now, this is basically a sheet just showing you, on the left, you have the date. You'll see most of them show November 19th, except the bottoms show November 18th, which we'll get into at the end. November 19th, because that was today, the day I'm recording this. I'm going to try to upload this. It'll be a late night upload, though. And I bought all these stocks today. Everything we discussed in this video, the next thing you're just going to see that it's a stock, that it's a buy order, the quantity, how many shares I bought in these stocks, the symbols, and towards the right of the screen, you're going to see the actual dollar amount. I just added up, the price that I executed at. So the price I paid times how many shares I bought. So you can get an idea of what each position I bought was. Now, this isn't my total position on these stocks. This is just buys for today, the additional shares I bought or new stocks that I've never had and I just bought. So in some cases, it's total. So now we'll just do a quick run through. For BurgerFi, I bought 5,000 shares. It was about $37,650 worth today. For Beyond Meat, I bought 500 additional shares, $38,795. For AT&T, I bought 2,500 shares. That's about $60,000. For Peloton, I bought 1,000 shares. That's about $47,000. For Canopy Growth Company, I bought 2,000 shares, about $25K-ish. For Discovery, 3,000 shares, around $75,000. For NVTA, 2,500 shares, about $47,000. For WeWork, I bought $43,000. It was 5,000 shares. Squarespace, we did 2,000 shares. I bought at $74,200. For Zillow Group, I bought 2,000 shares. That cost me around $112,000. I bought an additional 2,000 shares of PENN National. That cost me around $104,000. Bought 2,000 shares of Activision Blizzard. Cost me about $125,000. For Robinhood, I bought 5,000 shares, which cost me $147,000, but I also bought another 5,000 shares by buying 2,000 and then another 3,000. So basically another $150K. So $300,000 in Robinhood, 250 shares in Alibaba, which was about a $35,000 purchase, 1,000 shares in ARKG, the ETF for genomics, about a $68,000 purchase. Then for Disney, it wasn't shares, it was options, like I said. So there was one option I bought 25 calls for a $140 strike. It cost me $37,000 for that position. That expires December 23rd, so basically a little over a month from now. I bought 100 calls for January, so in like 2 months from now, $130 calls. Those ones cost me about $250,000 for those 100 calls. Then I bought 125 calls that are 2023 expiration. Those cost me about $500,000. Then for Facebook, I just wanted to add this in to show you I do still like the stock. It is not at a 52-week low or anything, but I bought 750 shares yesterday in after hours in addition to many shares that I'm currently holding, and that cost me close to $250,000. Now, if you made it to the end, thank you so much for watching. Please like this video if you haven't liked it. Please subscribe to the channel if you haven't subscribed. I'll definitely be doing more videos. And as always, I'm not a financial advisor. I'm just trying to give you my investment journey. Everything I told you about that I bought today, obviously it can change. I trade on a daily basis. I'm usually a long-term investor for most of my positions. But as positions change, as stocks go up and down, I move things around to optimize the portfolio. Thank you for watching. Until next time.